Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pillai, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. Welcome to our video series GST Relearn Part 10. Yes, and today we are going to learn accounts and records and e-way bill provisions under GST. So let's start and let me allow to share my screen. So we are today going to discuss accounts and records and e-way bill provisions under GST. So let's see what we are going to learn. So today we are learning under accounts and records under GST, persons required to keep accounts, place of keeping, period of retention, penalties, practical examples also we will see, and under e-way bill provisions we will see meaning, applicability, who generates, validity, documents, penalties, and also practical examples. So let's start with it. Accounts and records under GST. Relevant sections are sections 35, 36 of CGST Act, and relevant rules are rules 56 to 58. Persons required to maintain records. Every registered person must keep and maintain both, not or, must keep and maintain accounts of production or manufacture of goods, inward and outward supply of goods or services, or both if you are dealing in goods or services, stock of goods, input tax credit availed, that is ITC registered, output tax payable and paid. So what registered person need to keep and maintain? Accounts of production or manufacture of goods, inward and outward of goods or services, inward and outward supply of goods or services of both, stock of goods, input tax credit availed, output tax payable and paid. Under special cases, transporters. What transporters need to keep and maintain? Records of goods transported, delivered, stored in transit. Three types. What transporter needs to keep and maintain? Transporter need to record of goods transported, delivered, stored in transit. Then warehouse operators, those who are warehouse operators, they need to keep records of goods received and dispatch. Goods received and dispatch. They need to keep this record. And agents, records of authorizations, goods or services received or supplied on behalf of principal. So these are the three special cases, that is transporter, warehouse operators, agents other than registered person. So let's see practical example. A registered dealer in Delhi must maintain books showing purchases, inward supply from manufacturers in Haryana, sales, outward supply to customers in Delhi and Mumbai, stock at year end, and ITC claimed on purchases. This is a practical example for your better understanding. Now move into place of keeping records. Once we know what books or records need to keep and maintain, then we need to know where they are to be stored. Place of keeping those records. Records to be maintained at principal place of business. It is a mandatory to keep these all records, books were at maintained at principal place of business and nowhere else. If more than one place relevant records to be kept at each place of business. If more than one place as a place of business, then relevant records to be kept at each place of business can be kept in electronic form, backup, backed up for safety. Means backup also required to be necessary in case of soft copy form. So records can also be kept in electronic form. Example, a company with factories in Pune and warehouse in Nagpur stock records of Pune factory to be maintained at Pune and warehouse records at Nagpur to be maintained. Now, moving forward, period of retention. Once you know what records, books we need to keep and maintain, then where is the place to keep it? Then we now need to know period of retention, how much year you can retain those records or mandatory you can have to retain that. So record must be retained for 72 months, that is 6 years from the due date of annual return for the year. So you need to keep all those records for minimum 6 years from the due date of annual return for the year. If under litigation, until 1 year after final disposal of case. If your case is under litigation, then until 1 year after final disposal of case. Means if it is, if you are in a fifth year of that particular record and you are in that particular years in under litigation. So even though beyond 6 year, you have to keep it, and that is for until 1 year after final disposal of case. Example, for financial year 23-24, annual return due date is 31st December 2024. So from that date to 6 years, that is records to be kept till 31st December 2030, that is 6 years. After that, now we will see what will be the penalty for failure to maintain records. General penalty, rupees 25,000, and if goods or services not properly accounted, treated as if supplied, tax plus penalty may apply. Penalty for failure to maintain accounts, general penalty rupees 25,000, and if goods, services not properly accounted, treated as if supplied, tax plus penalty may apply. So this is all about accounts and records. Means we have seen what accounts one should be maintained, that is keep and maintain, where it to be placed, means where it to be kept. Then we have said how for how many years we need to retain those records. And also we have seen what would be the penalty to fail for failure to maintain those accounts. So now we will moving on to our second part of the discussion, second part of learning, e-way bill provisions under GST. Very, very important. Relevant rules are Rule 138 and 138E and the CGST rules. So let's first understand what is an e-way bill. E-way bill, an electronic document generated on GST portal for what? For movement of the goods. E-way bill is a document generated on GST portal for movement of the goods. Acts as an evidence of valid payment. Means earlier we need only delivery challan. Okay, now delivery challan plus we need to have e-way bill once a prescribed limit of the value of the goods is crossed whenever there's particular goods in the transporting. So electronic e-way bill is electronic document generated on GST portal for movement of the goods. It is an evidence of valid movement of goods. When required, mandatory if goods value exceeding rupees 50,000, single invoice or bill or delivery challan. In the relevant in a state of Maharashtra, it is rupees exceeding rupees 1 lakh. So limits are little bit different state to state wise, but general is goods value more than rupees 50,000, goods value exceeding rupees 50,000, single invoice or bill or delivery channel for supply, that is sale, transfer, or non-supply, that is job work, branch transfer, exhibition, return, etc. So normal supply is covered, and non-supply in the sense if it is internal by the supplier, with job work for branch transfer or exhibition or return. So that journey that also is covered under e-way bill. You need to generate e-way bill for that particular supplier also. And what is the value? Goods value exceeding rupees 50,000 in single invoice or single bill or delivery channel. You need to generate e-way bill on GST portal, that is e-way bill portal. It is a separate portal to generate e-way bill. Not required. When e-way bill is not required to generate for supply of transport of exempted goods like milk, fresh fruit and vegetables, that is a necessary items, milk, fresh fruits, vegetables, transporters need not, they are exempt goods, and and for transporting those goods you need not required to generate e-way bill. Goods transported by non-motorized conveyance means like cycle or any other mode of transport where no motor is used, non-motorized conveyance, then you need not required to generate e-way bill. And movement within 20 kilometer for job work or to web reach. So then when the limit is only 20 kilometers, then also you need not to generate what e-way bill. So these are the cases for when mandatory required to generate e-way bill, that is value, goods value exceeding rupees 50,000. And when not required to generate, where exempted goods supply, that is milk, fresh fruits, vegetables, and goods transported by non-motorized vehicle conveyance, or movement within the 20 kilometer for job work or web reach, when you know need to generate e-way bill. Let's see some practical examples. A textile manufacturer in Surat sends cloth worth rupees 75 lakhs to Mumbai dealer must generate e-way bill because the value of the goods exceeding rupees 50,000. Same manufacturer sending goods worth rupees 30,000 locally within Surat, no e-way bill required because value is not exceeding rupees 30,000. So very simple to understand. Who generates bills? Okay, now who generate e-way bill or who required to generate e-way bill? Registered supplier, or even though if not a supplier, then recipient if movement is by them. Transporter, if supplier or recipient has not generated, then transporter has required mandatorily to generate e-way bill. And unregistered supplier also required to generate if recipient generates if registered. Okay, means in case of unregistered supplier, recipient generates if registered. So these are the cases who generate e-way bill. Then validity of e-way bill, very important. So the e-way bill which you have generated, how much validity that e-way bill is has. So validity of e-way bill, that is up to 100 kilometers 1 day, every additional 100 kilometer plus 1 day. And validity can be extended in exceptional cases like breakdown and natural calamity. So one e-way bill you have generated, it is valid up to 100 kilometers for 1 day validity. Means if you are traveling for only 80 to 90 kilometers, so that e-way bill is valid for 1 day. But if the more than 100 kilometers, every additional 100 kilometers, 1 day validity plus 1 day will be additional for that validity. And validity can be extended in exceptional cases like breakdown or in case of natural calamity. Example, goods transported from Delhi to Jaipur 280 kilometers. validity 1 day first 100 kilometer plus 2 days next 200 kilometers. That is 3 days validity will be for that particular e-way bill. Then documents required during transit. Of course, invoice, bill of supply, delivery, challan are the necessary documents, but copy of e-way bill, that is physical or electronic, or e-way bill number mapped to RFID is also required while transiting the goods. So before or earlier, while only we have to keep invoice, bill of supply, or delivery challan, but now you have to keep copy of e-way bill whenever you cross the prescribed limit of the value of the goods. So let's see penalties for non-compliance of this. Goods without valid e-way bill liable for directly detention and seizure. So if your goods are transporting, if you are transporting those without e-way bill, if mandatorily required and you have not generated it, then those goods will be liable to detention and seizure, and penalty will levied at 100% of tax payable if owner accepts the liability, and 50% of value of the goods if tax not paid. Its penalty will be 100% of tax payable if owner accepts the liability, and 50% of value of the goods if tax not paid. Let's see example. Goods worth rupees 2 lakh seized without e-way bill. Goods worth rupees 2 lakh seized without e-way bill. Tax will be 18%, 36,000. So penalty will be rupees 36,000 if owner admits. If not, penalty may go up to rupees 1 lakh, that is 50% of value of the goods. 100% tax payable if owner accepts the liability. So 36,000 in a given example if the owner admits. But if not, then penalty will may go up to 1 lakh, that is 50% of the value of the goods. So very hefty penalty. So we need, this is the importance of the accounts and records and e-way bill. We need to be every accounting, every transactions need to be supported by valid keeping of accounting records, and we need to maintain and retain it also for 6 years from the due date of the annual return. And e-way bill provisions, you need to generate e-way bill from e-way bill portal whenever you cross the prescribed limit of the value of the goods, that is exceeding rupees 50,000. State to state, it is different. So that's it for today. We have done today under GST Relearn video series part 10, what accounts and records and e-way bill provisions. So hope you are learning. GST Relearn video series is for everyone to understand from basic concepts to advanced concept. So take the benefit of these video series which I'm conducting on Tax Guru YouTube channel. If you have not yet subscribed to Tax Guru YouTube channels, then do subscribe for this, and also various latest updates also posted on the Tax Guru YouTube channel. So stay tuned. We will meet in next video soon. Be in touch and we will learn more and more things. So hope you are learning from this video series. Take care. Happy, be happy, and Hare Krishna.